If your car insurance went up this year, even though you didn't get into an accident, didn't get a ticket, didn't move, didn't change cars, you're not imagining it. Millions of drivers saw their premiums jump this year, and a lot of people are frustrated because no one is explaining why. So, today I'm going to break down the real reasons your car insurance went up, what changed in this industry this year, why even safe drivers are paying more, and what you can actually do to lower your rates without downgrading your coverage. I'm Erin from Insurance Wise. Let's get into it. The big picture: why rates spiked in 2025. Throughout this video, I'm using Lemonade's car insurance platform because it is one of the clearest, easiest ways to understand how rates are calculated and why premiums increased this year. Their dashboard makes everything super transparent, so if you want to follow along or check your own rate, click the link below. It'll take you straight to the page that I'm showing. Now, let's zoom out for a moment. The price increase you saw this year wasn't random and it wasn't personal. It wasn't because of your driving record or your car or something you forgot to update. What happened this year was much bigger than any one driver. Car insurance companies set their prices today based on what they expect to pay out in claims tomorrow. And over the last 2 years, the cost of those claims has climbed faster than at almost any time in modern insurance history. So, by the time companies calculated their rates this year, they were staring at a huge gap between what they had been charging and what they were actually paying out. And that gap had to be closed, which means even if you didn't file a claim, someone in your risk pool did. Many people did, and the cost of those claims rose across the board. That is the real reason your premium went up this year, not because you did anything wrong, but because protecting a driver simply became more expensive for everyone. The real drivers behind the price jump. There are 5 core reasons car insurance suddenly got more expensive, and every single driver is feeling them. Number one, car repairs are more expensive than ever. One of the biggest reasons car insurance went up in 2025 is the cost of repairing modern vehicles. Cars today aren't just metal and paint. They are packed with sensors, cameras, radar systems, lane assist technology, and crash detection equipment. So, what used to be a simple, affordable repair is now a highly specialized job. A bumper that once cost a few $100s to fix can now run $2,000 to $4,000 because it has to be recalibrated to work with your car's safety systems. Even minor accidents involve parts and labor that are dramatically more expensive than they were just a few years ago. And because every claim now costs more to repair, insurance companies are paying out more money overall. Higher claim costs mean higher premiums, and that increase gets passed down to every driver, even the ones who didn't file a single claim. Number two, parts shortages and supply chain delays. Another major reason insurance rates climbed in 2025 has to do with ongoing parts shortages and supply chain delays. Even though manufacturing has improved since the pandemic, car parts are still harder to source and more expensive to produce. Something as simple as a side mirror, headlight, or windshield now takes much longer to arrive, and repair shops are often waiting days or even weeks before they can complete a job. And that delay creates a domino effect. When your car sits in the shop longer, the insurance company is paying for additional rental car days, storage fees, and extended labor time. On top of that, the cost of the actual parts has increased, which pushes claim payouts higher across the board. So, even if your car hasn't been in the shop recently, the national rise in repair costs and delays affects your premium because insurers have to adjust their pricing to match what they're paying out. Number three, medical costs increased a lot. If someone gets hurt in an accident, insurers are paying far more today than they did even 2 years ago. Ambulances, ER visits, surgeries, physical therapy, everything has gone up in cost. And because bodily injury claims are one of the most expensive types of claims, this directly impacts your premium. Number four, drivers are driving more aggressively. Post pandemic data shows more speeding, more distracted driving, more severe accidents. Insurance companies are paying out more in total losses, more in injuries, and more in lawsuits. Even if you're a perfect driver, you're sharing the road with people who aren't, and that affects your premium. Number five, litigation and payouts are higher. Accident lawsuits have increased sharply. Jury awards are larger, law firms are advertising everywhere. When insurance companies pay more in settlements, they adjust premiums to compensate. This part is unavoidable. It affects every single policyholder in the country. Why your rate went up even if you did nothing wrong. Now let's talk about the part that confuses people the most. Why did my rate go up? I didn't change anything. Because car insurance isn't priced only on your behavior, it's priced on your risk group, which includes your zip code, people who drive the same type of car, people in your age bracket, people with your driving mileage, your local repair and medical costs. So even if you're doing everything right, if the claims in your area or your demographics spiked, your rate increases too. For example, if repair costs rose in your city, your premium increases. If accidents went up in your zip code, your premium increases. If your vehicle model has high repair costs, your premium increases. Insurance is a shared risk system, and this year hit almost every risk category. Which parts of your policy got more expensive? Different coverages increased at different rates, and this is where people start noticing changes. Liability coverage. This went up because medical and legal costs skyrocketed. Even minor injuries cost thousands. One accident can lead to six-figure medical bills. Collision coverage. This increased because repairing cars is more expensive than ever. More tech means more money and higher premiums. Comprehensive coverage. This jumped due to car thefts increasing, weather events, vandalism. Comprehensive is still inexpensive, but it is more expensive than it used to be. Uninsured motorist coverage. More people are driving with no insurance or the bare minimum. This makes coverage more expensive because it's used more often. How claims technology changed pricing. One of the biggest shifts happening in the insurance world, and something most people don't realize, is how dramatically the claims process has changed. Modern companies, including Lemonade, now use advanced technology and AI to review and approve claims almost instantly. What used to take days or weeks can now happen in minutes, and from a customer experience standpoint, that's amazing. It reduces stress, eliminates paperwork, and helps people get back on the road faster. But here's the part that affects your premium. Faster claims also mean faster payouts. There's less friction, fewer delays, and fewer opportunities for claims to be denied or minimized. When a claim that once took weeks is now approved in a few minutes, insurers are paying out money much sooner and much more consistently. That speed increases the total claim cost for the industry. So even though technology has made the process feel smoother and more modern for drivers, it also means insurance companies are paying more overall than they used to. And that increased cost gets baked directly into premiums. It's not something you did wrong, it's simply a new reality of the industry. Easier claims for customers means higher expenses for insurers, which leads to higher prices across the board. What you can do to lower your rate this year. Now for the part everyone cares about, what you can actually do to bring your rate back down. Because even though insurance prices increased nationwide, you're not stuck with a number your renewal gives you. You still have control. The first and simplest option is to reshop your policy. Traditional insurers make this a headache, but modern companies like Lemonade let you see your price instantly without phone calls, sales pressure, or long forms. If your current company raised your rate significantly, checking another provider is one of the fastest ways to save money. Another option is adjusting your deductibles. Collision and comprehensive are two of the biggest cost drivers in your policy. If you raise your deductible slightly, even by 250 or 500, your monthly premium can drop meaningfully without sacrificing the major parts of your coverage. Bundling is another underrated saving tool. If you have renter's insurance or homeowner's insurance, combining it with your car insurance can lower both premiums at the same time. Lemonade especially makes bundling simple and transparent, and the savings can be substantial. Safe driving programs are also becoming mainstream. Telematics apps track your driving behavior, things like smooth braking, consistent speeds, and not using your phone, and reward you with lower rates if you are a safe driver. If you drive carefully already, this can work entirely in your favor. And finally, you can review your policy for add ons you may not need. Things like rental coverage, roadside assistance, or glass protection can be removed if you're trying to bring your bill down. But one thing you should never reduce is your liability coverage. That's the protection that shields you from the most expensive types of claims, and lowering it to save a few dollars can expose you to enormous financial risk. The bottom line is this: yes, rates went up this year, but with a few smart adjustments, you can still take back control of what you pay. Why Lemonade stands out this year. One thing I really appreciate about Lemonade's car insurance is how transparent and flexible the entire experience feels. Instead of locking you into a one-size-fits-all policy, you actually get to customize everything based on how you drive and what you need. Your price updates instantly as you adjust your coverage, your deductibles, or your limits, so you can clearly see which options matter and which ones don't, without having to call an agent or sit on hold. What also sets Lemonade apart is how quickly they handle their claims. Their system is designed to review and approve simple claims in minutes, not days, which makes a huge difference when you're already dealing with the stress of an accident. Bundling is just as easy. If you already have renters or homeowners insurance, Lemonade automatically applies the discounts and handles all of that setup for you. And if you're switching from another company, they even guide you through canceling your old policy so you're not stuck juggling paperwork. What makes their approach unique is the transparency behind the scenes. Lemonade takes a flat fee, pays claims quickly, and uses whatever is left at the end of the year to support causes you choose. It's a simple, modern model that feels fair, especially in a year when everything else has gotten more expensive. In a market where most people feel like they have no control over their insurance bill, Lemonade makes it easy to understand exactly what you're paying for and what you can adjust to save money. It puts the power back in the driver's hands, which is something most traditional companies just don't offer. So that's why your car insurance went up this year, and more importantly, what you can do about it. If you want to check your current price, compare options, or see how much you could save with a more modern insurer, you can use the link below to get a quote through Lemonade. It takes about 90 seconds, you'll see your price instantly, and you can customize everything without calling an agent or waiting on hold. If this video helped at all, give this video a thumbs up, subscribe. I'm Erin from Insurance Wise. Thank you guys so much for watching, and I'll see you guys in the next one.